Roku reported EPS that beat expectations by 51 cents and revenue that beat expectations by $72 million. So this news caused Wall Street analysts to increase their price targets across the board. So we saw Wedbush, Oppenheimer, Rosenblatt, Needham, Pivotal Research, JP Morgan all raised their price targets. A couple of them still have, sell ratings and neutral ratings, but overall, the even the bears on the street had to increase their price targets in reaction to Roku's earnings report. So that just tells you that this report was undeniably bullish for the stock. All you have to do to look at that is, one, look at the stock price, obviously. Two, look at how Wall Street is reacting. So definitely good to see all of that there. With that being said, let's take a look at how the stock looks on the chart. First off, this is not financial advice, so please do your own research in D&D. But with that being said, let's take a look at all this. So you can see here that shares have been bottoming at the, shares have been breaking out from this $76 resistance level, which is where shares had topped out in February. It's also where shares had topped out in September. So this level also topped out in June. So this $76 level is acting as pretty firm resistance for the stock, and we've officially broken through that level. We broke through it briefly over here in mid-July, but that break really didn't last. Now that we are back above this resistance level, I think this break of this $76 resistance level actually holds because we got a massive jump in volume as we broke this resistance level. For those that don't know, anytime you get a jump in volume on which coincides with a break of major support or resistance, it just brings more validity to that breakout and implies that the breakout should hold and continue in whatever that direction is. In this situation, it's higher, obviously. So given all that, we broke major resistance at $76. I think we'd likely see a move higher over the coming weeks to at least $101 over the coming weeks, which is where shares had topped out in June, of last year and also May. So, for my money, it seems pretty likely that we continue higher after this break of resistance. Also, we're trading above all daily moving averages, which is obviously a good sign. For those that don't know, we also had a golden cross, which is where the 50-day crosses over the 200-day moving average in April, and this is like a longer-term sign of bullish momentum, and definitely a bullish signal for any stock. So good to see all of this. Currently, shares are overbought according to RSI, so maybe that could lead to a short-term pullback. But a good way to play this would be if we pulled back and we came back to around $70, around that support level. That would be a great buying zone for the stock. So that's kind of what I'm looking at for the stock. But with that being said, I'll keep it moving here and I'll go into the next thing I want to cover. So let's take a look at some of the seasonality trends for the stock. So we can see here that in July, shares typically rise 10%. And in August, shares typically rise 5.3%. So this screen shows me the average return by each month. So we can see here that August is a bullish seasonal month for the stock. So we have this bullish seasonal trend kind of lining up with that bullish technical. So good to see there, obviously. And then when we take a look at Roku here and their short squeeze data, so we can take a look that their days to cover is 1.8, which basically tells you that it takes 1.8 days of average volume to cover the shares that are sold short. Typically, when we're looking for a short squeeze, we look for a number of 10 for days to cover. So well below that, definitely wouldn't say these numbers are implying a short squeeze for the stock. And we have about 10% of the float sold short. I want to take the time to cover some customer growth numbers here. So we can see that with active accounts increasing by 16% year over year, this ranks out pretty good when you compare it to the past couple quarters of growth. So we see in Q2 of 2022, 14% year over year growth. Q3 of 2022, 16% year over year growth. Q4 of 2022, 16% year-over-year growth, and then 17% last quarter. So we're basically in line with where we've been growing active accounts over the past couple quarters, which is awesome to see as this number is very high. And then let's take a look at the revenue growth rate and how that's progressed over the past couple quarters. So we had a down Q4 of 2022 and a down Q1 of 2023, and then Q2 up 11%, and then expectations are for an 8% jump in Q3 for 2023. So these revenue growth numbers look very solid. But with that being said, let's take a look at how the financials look for the company. So with Roku, obviously the company doesn't make any money at this current time, but price to sales is at 3.7 times and 3.9 times for the past 12 months. And this is well above the sector median of 1.25, yes, and it's also well below Roku's 5-year average of 11 times sales. So, this is really the only metric I have to go off of in terms of historical averages. But when you look at price to sales, it definitely is implying that the company is trading at a cheaper valuation in terms of price to sales than it has historically. So valuation looks poor when you compare it to the peers, of course, but it looks decent when you compare it to the stock's own history. Although price to book ratio looks pretty good as well. And we can see here that the price to book ratio is at 5 times, which simply means, for those that don't know, means that the market cap is 5 times the book value of the company. And that is above the sector median, which we don't like, but it is well below that 5-year average for Roku at 18 times price to book. So once again here, we're seeing these valuations numbers look pretty dismal compared to the sector, but look advantageous compared to the company's 5-year average. Let's look at growth numbers here. So year-over-year revenue growth was about 6% for the stock, which is above the sector median, but well below the company's 5-year average. And then we see revenue growth for the next 12 months at almost 12%, which is above that sector median, but once again below that 5-year average. So these numbers are kind of telling me that the company is trading at a good spot in terms of growth relative to the sector median. But when we take a look at the company's growth metrics compared to its 5-year average, well, it does seem like growth is slowing pretty rapidly here. And then let's take a look at the company's profitability margins and their overall profitability numbers here. So we can see that the company trades at a gross profit margin of 44%. I shouldn't say trades, but has a gross profit margin of about 45%. And this is basically in line with the sector median and right on par with the 5-year average. So good to see those numbers there. One thing I don't like here is the net income margin is very poor compared to the sector median, with the sector median sector median net income margin at 3%, and Roku's negative 20% net income margin. And this looks poor across the board. So we're below the sector median, and we're also below the 5-year average for the company. So profitability numbers don't look great for shares, but when we take a look at leverage free cash flow margin, we're at 9.8%, which is well above the sector median at 7.8%, and well above Roku's 5-year average at about 4%. But overall, these numbers don't look tremendous. And then when we take a look at cash per share, we're at about $12.40 of cash per share. That's about 13-14% of the market cap is in cash. So that is definitely a solid number there. Definitely, anytime you see a company that has a significant amount of their market cap in cash, it's definitely something that gives investors stability and peace of mind, if you will. And then let's take a look at this company's balance sheet, though. So we can see that the company has $1.7 billion in cash compared to debt of $1.1 billion. Of $600 million. So net, the company has $1.1 billion more cash than debt. And then we look across the sectors here. We can see that TME has $2.1 billion more cash than debt. and we can see the other close peers, have more debt than cash. So overall, this balance sheet does look pretty solid, although it's not the best amongst the peers. Let's see how the profitability metrics rank out amongst the peers, though. So we're basically in line in terms of gross profit margin. For those that don't know, too, gross profit margin is just revenue minus cost of goods sold. So it basically just tells you what you make for every single product or good that you sell. So to have a 44% number here isn't too shabby, although obviously it could be better. And then net income margin is at minus 20%, which is well below all of the peers. So overall, net income margin is kind of dragging us down here in terms of profitability. So overall, the company has worse profitability metrics than the general peers. And then when we take a look at growth, growth actually looks pretty solid. So let's look at the 5-year compounded annual growth rate for the company, which is at 39%, which is well above all the peers. So it is very good to see that the company, yes, it's trading at, it has growth numbers that are below its 5-year average, but when you take a step back and look at how fast this company's been growing, it's actually outperforming the peers by a wide margin. So good to see those growth numbers, kind of separate Roku from the pack, if you will. And then when we take a look at the company for valuation, obviously we're not profitable right now, but let's take a look at 3 years down the line, fiscal year 3. So we're supposed to be trading at a negative 43 times PE. So the company still won't be profitable in 3 years, according to this projection here. So we can see that the company isn't profitable and is trading has a really poor valuation number relative to its close peers, which isn't a good sign for the company. With that being said, you can see that the company has lagged the entire peer group, and over the past 12 months, it's actually the worst performing peer out of the entire peer group. So I'm thinking that this likely changes over the coming weeks. We can see that we just kind of spiked up here, and we're basically trading in line with most of the peers right now, or at least close to a couple of them here. And that's really just because of the move over the past couple of days. So, hopefully that continues to change and we see Roku kind of, wake up here in terms of trading. So to kind of wrap everything up, the company has valuation numbers that are well expensive relative to peers. And then we also have growth numbers that look very solid relative to peers, but are below the company's 5-year average. And then we have profitability numbers that are kind of middle of the pack, but this net income margin looks pretty poor. And then the balance sheet looks solid, though. So you add it all up, it does seem like the company, is a decent opportunity. But for my money, I would want to see the company execute on a couple more of their plans and goals to move towards profitability, to move towards a positive EPS before I kind of put a lot of long-term money into this stock. But like I said, on the chart here, we're breaking out pretty significantly, and that definitely could lead to some more upside over the coming weeks. So this $76 resistance level being broken is nothing to sneeze at, and definitely could imply more upside for the stock over the coming weeks. So technically, it definitely looks like a buy. Fundamentally, and looking at the financials, I would say I'm going to wait until the company is profitable. Personally, I'm just a little bit more of a safer investor like that. So that doesn't mean it's not a good long-term investment. I think it's definitely attractive, but I would just be a little careful kind of diving headfirst into a company that isn't profitable. But with that being said, their customer growth looks very attractive, and this does seem like a decent company to take a larger look at and consider some long-term investments. So with that being said, that is my opinion on Roku. I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck, everyone. Happy trading, happy investing.